From help saving for retirement to more of your tax questions, it is Money Monday, a segment where we discuss easy ways to understand our finances and make smarter decisions with our money. Here to help us out is our good friend and financial expert, Paul Hood from Hood CPAs. Paul, good to see you today, my friend.
How are you, my friend? You doing all right, Ryan?
I am doing well. We have three great viewer questions that came in over this past week. Let's start this afternoon with Mary. Mary says, I received my W-2 from out of state with an incorrect social security number, but my driver's license number is correct. Do I need to contact my employer to get a new W-2?
Well, that's a tough one. So the answer is definitely yes, but it's probably going to take a while. Employers are very reluctant to do that. It costs some time. They have to reissue basically and send that to the IRS as well as the Social Security Administration. She can try to file. When she electronically files, put that in, and hopefully it matches up with the IRS so it doesn't get kicked back. But in today's world with all the identity theft, the IRS is being pretty strong on matching Social Security numbers, last name, and income that comes in. She should be okay. I would probably say go ahead and try to file, contact the employer, and then by the time the IRS questions it, maybe they have corrected the W-2.
All right, good stuff. Mark is headed overseas. Mark says, I'm going to live in Europe for a year while working remotely for a job in the United States. What are the tax consequences? Will I need to file in the U.S. and another country?
So as a U.S. citizen, Mark will have to file a tax return in the United States that includes income worldwide. So regardless of what country he works in, that is income he has to report on his tax return. Now, there's two ways to keep from getting double taxed. One is called a foreign earned income exclusion. And you either have to be a bona fide resident of that other country, and then you can exclude it. You still have to file a U.S. return, but you exclude it. Or if you have what's called a physical presence test, which means you spend 330 days of any rolling calendar year there, then you can exclude. I think the number is $90,000 for that income off your tax return. Then the second way, so you can exclude the income if you meet one of those requirements, or you can take what's called a foreign tax credit. So you pay taxes in the U.S. and the foreign country, and then take a credit in the U.S. for the foreign taxes paid.
All right.
It's very complex, so I would definitely recommend Mark get some help.
All right, Paul, good. Quickly to Susan here, less than a minute on the clock. Susan says, I have a 401k from my employer. They are telling me that it is going to be liquidated. I'm 50 and not sure whether to take the money out now, pay the penalty and interest, or let it sit in an IRA till I reach retirement age.
So that's a real simple answer. Absolutely roll it over to an IRA. Don't touch that money. It's for your future. It's not for today, and there's no reason to pay a penalty, nor is there any reason to pay the taxes and interest today.
All right, advice for everyone, right, Paul?
You betcha.
All right, yeah, don't pull that money out before you qualify. You don't want to pay that penalty. All right, Paul, we can't wait to have you back in studio next Monday, and we'll
see you then.
We'll do it in person, and we'll answer your financial questions. If you have one, just like those folks did, you can send in your question by email right now to moneymonday@griffin.news.